Hello, so quite a cool setting for today's video. We've got the lovely River Thames, the wasted River Thames, the wasted resort. Look at that, I'm in the House of Commons, I'm in the House of Lords, and so that is the most prime real estate in the whole of London, right behind me, and nobody's using it. It's totally vacant. The Thames, it's the same in most cities, it's just the most underused resource that there is. Anyway, I'm not here to talk to you about the Thames today. I'm going to talk to you about the dollar. Can anything stop this run in the dollar? We suggested a couple of weeks ago, or I did, that oil might be the next market to drop, and so it's turned out. Both Brent and West Texas Intermediate have gone below $100 a barrel, and they're sort of joining metals on this downward slope. Metals have been battered even harder. Silver, as often seems to be the way, is leading the fall downwards. How can silver be trading below $20 an ounce? And platinum, how can platinum be at $850? And I'm not saying they aren't going lower, they probably are, but there'll come a time in the future when we'll be wondering how on earth it was possible to buy those metals at those prices. Platinum is half the price of an ounce of gold. It's supposed to be like 1.25 times the price, half the price of an ounce of gold. Remember when nickel went to 100 grand a ton earlier in the year? It's 20 grand now, 21 grand. Wheat's at $800, it was $1,300 in March. Corn, oats, soybeans, lumber, you name it, there is carnage in commodities. Never underestimate the boom, the bust to boom to bust potential of raw material markets, I guess is the lesson. Got a plane going overhead, very noisy plane. But yeah, natural resources always seem to go back whence they came. And with this rout in commodities, the inflationary episode, and I stress I'm using inflation with its modern meaning rising of prices of goods in the CPI basket, the other kind of inflation, debasing money by creating too much of it, that's not going anywhere. But with this fall in raw materials prices, it is possible that this inflationary episode comes to a bit of an end, and the villain in the piece has been the US dollar. The dollar index is now at 107. Can it go higher? Possibly. It's come a long way already. June of last year, I'm sure I was doing videos on here, it had made a double bottom at 89. And I kept saying, beware this if it can go much higher. 103 was the line in the sand. It got through that at the second attempt. 120 is the next big one. And it really would be an outlier if it got there, but this is a time of outliers. The euro is now at $1.01. Parity beckons. In 2000, with the dot-com chaos, it got to 82 cents. But that was before it had fully launched across all the member states. Is it going there to 82 again? Again, it would be an outlier, but it's possible. The pound's at 118. I wouldn't rule out parity there either. Long dollar is a crowded trade now. Everybody's talking about it. When it turns, and it will, there's going to be a lot of money made on the other side of the trade. FX traders are going to be all over it. As you know, there'll be a scramble for the exit, and you'll be long anything anti-dollar. Gold, the euro, perhaps even the yen, and this is my idea. Looks like the police are after me. Look, there's the first boat going past now, the first boat in all this time. It's just, the Thames is the most underused resource. It makes you cry. Well, not cry, it just disappoints you and frustrates you. And it's the same. I'm going to do a video about what a waste of an asset the Thames is, but that's for another day. Anyway, the yen is at lows not seen since the Asian crisis of 1998. My question is, my theory is, could Japan have its own Swiss bank moment? And I'm referring to 2015, when Switzerland announced that it was going to abandon the franc's peg to the euro. It was pegged at 120 euros to the franc. And as soon as that announcement came out, the franc instantly shot up 20% as a result, which is an astonishing amount for a major currency. And that move destroyed many a forex trader's fortune, not to mention, perhaps more importantly, the many people who had Swiss-denominated mortgages and other forms of debt. Many of them were from poorer nations with weaker currencies, and that was a hard pill to swallow. Now, the yen isn't pegged to any currency, but the Bank of Japan has committed to holding its benchmark 10-year government bond yield to 1/4%. And this is so-called yield curve control. Pins down borrowing costs and stimulates growth, ergo causes asset price inflation, except that it hasn't worked in Japan for years. Doesn't stop them from doing it. And for decades now, shorting Japanese bonds, i.e. betting on higher yields, has been the mother of all widowmaker trades. And I'm not just ready to fall into that trap yet. Even if Japan's buying of its own bonds has gone nuts, the government now owns over 50% of its own bonds. It's just printed the money. And the rate of purchase has only accelerated as it tries to hold the 10-year at 1/4%, even as the rest of the world starts its quantitative tightening, i.e. doing the opposite. But even with private sector savings in Japan exceeding the fiscal deficit and so much government buying, Japan may have to stop defending that 1/4% market, maybe because yields get too low relative to other nations. It may just be that inflation pushes it over the brink. And a weaker currency means higher inflation, of course, higher costs. But whoa, there is a reversal in the yen waiting to happen. And by the way, this is a chart of Japanese government bond buying of its debt, and you can see how nuts it has gone recently. And this is the yen since 1990. When the red line falls, the yen is getting weaker, and the y-axis shows how many dollars you can buy for 10,000 yen. But you can see just how extraordinarily low it is on a long-term basis. Now, I don't know when the dollar turns, but there's going to be a mad scramble when it does. Thanks very much for watching. Kind of a cool setting. The problem is it's lit. The Thames is lit behind, so I'm actually in the shadow, and often that doesn't make for very good visuals. But anyway, please subscribe to my channel. Please subscribe to my Substack. Thanks very much for watching. Cheerio.